All right, so today we're diving deep into Honeywell Automation India Limited, and more specifically, their second quarter performance for fiscal year 25. Now, you might not be spending all your time reading financial statements, so we're going to break it all down for you. So we got Hale's officially released Q2 FY25 results. And that includes their press release, the auditor's review, and all the good stuff. The balance sheet, cash flow, the whole nine yards.
We're going to cut through the noise
Uh,
and help you extract the key insights that really matter.
Yeah, we're going to break it down. Plain English, maybe some relatable examples. So you can walk away feeling confident and informed about what's going on with Honeywell in India.
So let's just kick things off with the headline figures from the report. Hale recorded 10,239 million rupees in revenue from operations for Q2. Now revenue from operations. That basically means the money they made from their core business activities, selling their products and services.
Okay, so that's how much money they brought in. What about profit?
Their profit before tax was 1,553 million rupees. And their basic earnings per share, which is the profit divided by the number of shares, came in at 130.1 other 8 rupees for the quarter.
So how do those numbers stack up against last year? Did they make more or less money?
That's a great question. Compared to the same quarter last year, revenue is actually down slightly. In Q2 FY24, their revenue was 11,042 million, so they brought in a bit less this time around.
So revenue's down. What about their profit?
Profit before tax also dipped a bit compared to last year. It was 1,639 million in Q2 FY24. However, important to note that both revenue and profit are up compared to the first quarter of this fiscal year, so they've seen some improvement recently.
Okay, so they're on an upward trajectory, but still trailing behind last year's performance. So what factors are driving these changes? Is it specific products, services, or maybe something to do with the overall market?
Well, one thing to understand about Hale is that they operate in a single segment, automation and control systems.
So they've put all their eggs in one basket, so to speak. That laser focus on automation must play a big role in their performance.
Absolutely. Their performance is heavily tied to the trends and demands within that specific market.
Okay. Now, I noticed something in the report about a change in their contractual terms, something about expenses and how they're reported. Can you shed some light on that?
Yes. Starting from April 1st, 2024, Hale implemented a new policy requiring pre-authorization for expense reimbursement. This change primarily impacts how they report revenue, but it doesn't actually affect their overall profit. It's what we call profit neutral.
Profit neutral. Okay. Break that down a bit further.
Imagine you're managing your household budget. You have money coming in, which is like your revenue, and money go out for expenses. Let's say you decide to track your grocery spending differently, moving it from one category to another. Your total spending hasn't changed, just the way you're categorizing it.
Oh, I see. Moving money from one pocket to another. The total amount stays the same, just where it shows up on the books is different.
Exactly. It's all about accounting practices. Reimbursements included in revenue for Q2 FY23 were 589 million rupees. And for the first half of the fiscal year ending September 30, 2023, it was 11,150 million.
Okay, so even though this accounting shift doesn't affect their profit, it still changes how we interpret their revenue numbers, right?
Precisely. It highlights the importance of looking beyond just the top-line revenue figure and digging deeper into the details of their financial reporting.
Makes sense. We need to see the whole picture. But before we move on, is there anything else we should know about what drove Hale's performance this quarter? Good or bad?
Well, the materials don't provide specifics on product-level performance or regional breakdowns. There's another interesting point to consider. Remember that sharp focus on automation and control systems we discussed? Well, there's a piece of information in their financials that might be connected to that.
Oh, okay.
Their cash and cash equivalents have decreased significantly since the last fiscal year.
Okay.
Now, this could indicate that they're strategically positioning themselves for a big move,
It's interesting.
potentially a major acquisition, or a bold investment in a new technology related to their core focus.
So while we know that Hale is sticking to their automation and control lane, we might be seeing the early signs of some big changes brewing.
Exactly.
Well, stay tuned, folks. We're about to unpack the potential strategic moves and what they could mean for Hale's future in the next part of our deep dive. So before we got into that cash situation, we were talking about how Hale's laser focus on automation and control systems could be a sign of big moves to come. So let's unpack that a bit further.
Yeah, definitely.
What kind of strategic moves could this signal?
Well, the materials we have, they don't lay out specific plans, like new product launches or grand expansion strategies, but that decrease in cash and cash equivalents is a breadcrumb trail worth following?
Like they're quietly gathering resources, getting ready to make a splash?
Right. One possibility is a major acquisition. Imagine Hale buying up another company. That complements their existing offerings. Or expands their reach into a new niche within automation and control.
They could instantly boost their market share or gain access to cutting-edge technology that they don't currently have.
Exactly. Another possibility is a large-scale investment. In research and development, they could be pouring resources into developing new products, solutions that could revolutionize the industry.
So instead of playing catch-up, they could become the trendsetters.
Precisely. And let's not forget about geographic expansion. Even though they're focused on India, they might be eyeing opportunities in other emerging markets with high growth potential.
So this drop in cash could be their way of fueling a global automation empire. But of course, any strategic move comes with its own set of risks and challenges.
Absolutely. Acquisitions can be tricky to integrate successfully, and research and development is inherently uncertain. There's always the possibility that those big bets won't pay off.
Yeah, and even if the strategy is sound, external factors like economic downturns, changes in regulations, could throw a wrench in the works.
Right. It's a complex equation with many variables. But what we can say for certain is that Hale is in a strong financial position to make bold moves.
They're holding a good hand of cards. Now, beyond those potential strategic plays, how would you assess their overall financial health? Are they on solid ground?
Based on the information we have, I'd say yes. Their balance sheet looks healthy, and their profitability remains strong, despite the slight dip we discussed earlier.
So for someone looking at Hale from an investor's perspective, is this a company worth betting on?
That's a question every investor has to answer for themselves. But these results certainly paint a picture of a company with a clear focus, a solid track record, and the financial firepower to pursue ambitious goals.
And that little mystery surrounding their cash deployment just adds another layer of intrigue.
Absolutely.
Investors love a good puzzle.
Speaking of anticipating moves, there's another detail in the report that caught my eye, something investors might want to consider.
Oh, really? What's that?
There's been a change on the board of directors. Mr. Brian Rudick has resigned, and Mr. Pedro Thangorote has been appointed as an additional director.
So a shakeup at the top, that could be a sign of a shift in strategy or direction.
Exactly. It's definitely something worth keeping an eye on. New leadership often brings new ideas and priorities.
So it'll be interesting to see how this change in the boardroom might influence Hale's decisions in the coming months and years. Now, before we wrap up our deep dive, I want to circle back to something we touched on earlier. The change in how Hale reports expenses. I know it's a bit of a technical detail, but it's important for investors to understand how it might affect their perception of the company's performance.
You're absolutely right. While this accounting change doesn't impact their actual profit, it can create a bit of an optical illusion when comparing their current revenue numbers to previous periods.
It's like looking at two photos taken with different filters. The underlying image is the same, but the way it appears has changed.
That's a great analogy. Investors need to be aware of this shift in reporting. When analyzing Hale's financial performance, they should focus on understanding the underlying trends in their core business, rather than getting distracted by the change in presentation.
It's all about seeing through the numbers and understanding the real story they're telling.
Exactly. And that brings us to the final thought we want to leave you with. A question to ponder. As you continue your own research on Hale, remember that intriguing dip in their cash and cash equivalents?
Oh yeah, can't forget about that.
We speculated about potential acquisitions, R&D investments, and geographic expansion. But what if there's another explanation?
Okay.
What if Hale is anticipating a major shift in the automation and control market itself?
You mean like a technological disruption? Or change in customer demand?
Exactly. Perhaps they're building a war chest to weather a storm, or to capitalize on an emerging opportunity that isn't fully visible yet.
So instead of making a big move now, they're strategically positioning themselves to adapt and thrive, no matter what the future holds. That's a fascinating perspective, and it highlights how important it is for investors to consider, not just the current state of a company, but also the potential forces that could reshape its future.
Exactly. And with that thought-provoking question, we'll wrap up our deep dive into Hale's Q2 FY25 performance. We hope you found it insightful and engaging.
And remember, this is just the beginning of your journey. Now it's your turn to dig deeper, explore those unanswered questions, and draw your own conclusions.
Stay curious and happy investing.
All right, so welcome back to the final part of our deep dive into Honeywell Automation India Limited's Q2 FY25 results. We've covered a lot of ground. From their solid performance to that intriguing cash decrease.
Yeah, we explored potential acquisitions,
Yeah.
R&D investments, even global expansion. But remember, there might be an even bigger picture to consider.
Right. We left you with a question. Whether Hale is sensing a shift in the automation and control market itself and holding back resources to adapt to whatever's coming next.
And while we don't have a crystal ball, we can certainly look for clues.
So what should our listener be paying attention to? What signals might indicate that Hale is preparing for a major market shift?
Well, one thing to watch for is their investments. Not just the big ones we've discussed, but smaller strategic ones.
Okay.
Are they partnering with startups, acquiring niche technologies, or making moves that seem out of character?
So we're looking for those subtle hints, those moves that might not make headlines, but could signal a shift in their thinking.
Exactly.
Okay.
Another thing to keep an eye on is industry news and trends.
Yeah.
Are there new technologies emerging
Uh-huh.
that could disrupt the automation and control space? Are customer expectations changing in ways that Hale needs to address?
So it's not just about what Hale is doing, but what's happening around them. The competitive landscape, the regulatory environment, even global economic trends.
Right. All of those things could play a role.
Mm-hmm.
And don't forget about Hale's communication. What do they say in their press releases, investor calls, industry presentations? Are they hinting at any future challenges or opportunities?
It's like they're leaving breadcrumbs for us to follow. Each piece of information, each strategic decision helps us piece together their vision for the future.
Exactly. And that's what makes this so interesting. It's not just about understanding the numbers, but understanding the story those numbers are telling.
And the story of Honeywell Automation India Limited is far from over. They're a company in motion, and we can't wait to see what chapter they write next.
So to our listener, we encourage you to keep digging, keep asking questions, and keep an open mind. The world of automation is constantly evolving, and so is Hale.
Yeah. And remember, this deep dive was just the starting point. Hopefully we've given you the tools and knowledge to explore further.
Now it's your turn to be the detective, the analyst, the informed investor.
That's right.
Happy exploring.
And thanks for joining us.